Hey everyone, welcome to Introduction to Forex Trading Part 2. In this video, we are going to talk about the two main types of Forex analysis, and I'll share with you some important tips on how to succeed in Forex trading. Coming right up, stay tuned. So, in my previous video, we defined what Forex trading is and how profitable it can be if done correctly. And we also listed out why majority of the traders lose money. If you haven't watched that video, I have posted the link of the video in the description below, so be sure to watch it. Now, back to our topic. There are two main ways of analyzing the charts to be able to predict the movement of the market. The first one is fundamental analysis. The second one is technical analysis. So, in fundamental analysis, you are looking at the economic conditions that affect the valuation of a nation's currency. There are so many indicators or economic indicators that we call that you can take a look at when you're analyzing the markets. The most important ones are rate of inflation, interest rates, GDP, etc. Now, GDP is what we call as a lagging indicator, which means that the data is published after the event has occurred. Let's say, for example, an emerging country, for example, India or Brazil, posts their GDP rates for the year, like 6% or 7%. It means that the total value of all domestically produced goods and services over a period of 1 year is 6% or 7%. Okay, I hope that was clear. So with the lagging indicators such as GDP, what you look at is you can gauge the trend of the economy. You can figure out how well that country is doing in terms of its economic health, and it helps you figure out what can be the future of that particular country based on a lagging indicator such as GDP. Now, the second one called a leading indicator. A leading indicator can be such as the initial jobless claims. These, just remember, don't confuse too much with the terminology here. So, a leading indicator is predictive in nature. So, as soon as you see the news result in the market, there's a price movement happening right away, and you can clearly see it on the charts. So, people who trade only fundamental analysis are basically looking at these numbers, and they are making their moves in the market depending on the results that are out. Now, the economic data reports are accessible for free. You can head over to some websites such as investing.com, NetDania, or forexfactory.com. Personally, I use investing.com to look at the economic data and the economic numbers. Um, the reason why I chose investing.com is because not just it's well reputed, but the data shown in investing.com is pretty accurate. So let me show you on how to look at the economic data on investing.com. So you go on to investing.com website. So you go on to news, and there's a pop down menu, and you select economic calendar. So when you do that, you have this whole bunch of news data releases from different parts of the world. So you might see a single bull, two bull, and three bull news. Now, a three bull news is what you can call as high impact, so that you can expect a lot of volatility in the market when this is released. Okay, two bull is moderate volatility, one is low volatility. So when you're trading, remember that you're looking at this economic calendar every day, and there are some very important ones like I listed out. GDP is one, the NFP report, interest rate decisions, also the inflation rate, the initial jobless claims. So these are some of the economic data which can move the market heavily. So if your style of trading is mainly around trading the news, then you are more of a fundamental trader than a technical trader. So, what is technical analysis? So, technical analysis is predicting the future value of a currency pair using the price movements of the past. For example, let's say Euro USD reversed from a level of 1.11500 price 4 months ago, and now it's going back to retest that level. How do you trade? So this is where all your technical data comes in, your support resistances, um, trend lines, your candlestick patterns, indicators, and so on. So technical analysis, you're pretty much looking at price action, and you're trying to figure out the movement of the market based on what has happened in the past, and using a bunch of tools, as I mentioned before. Some people trade solely based on the technical chart. They use a lot of indicators, they use price action, and it's totally up to you what works for you as a trader and what you enjoy doing the most. Personally, for me, I tend to combine the both. So, how I trade a fundamental news release is that I look at the data, and depending on the type of data, I try to follow the trend of the market, combining chart analysis such as support resistances, trend analysis, candlestick patterns, and so on. So, personally, for me, as I said, that works a lot better. Now, it's totally up to you and what your preference is. I think they are both very important. It just depends on what you like to do. So, guys, that was some information on the different types of Forex analysis. Now, if you did enjoy this video so far, please give me a like and also post a comment below. Moving on, the next topic is how do you succeed in Forex trading? The key to success in Forex is education. You may be following the best trader out there who is giving you the best signals, but if you be completely dependent on signal providers and not actually investing your time and effort in educating yourself, I think trading in long term will not be beneficial for you. The first thing you need to do is actually learn some of the most fundamental things in trading, which is price action. Now, with price action, you have a very good understanding of how candlestick pattern works, what a forex market looks like, how do you read chart patterns, how do you know when the price is going to reverse, and so on. Also, guys, remember there's no holy grail trading system or strategy, which means that there's not one trading strategy that works every time. There's no need to complicate trading. I don't think trading is very complicated. The only thing is that people try to overanalyze, which means they are trying to find the best system or the best strategy, and that kind of that messes up everything. So if you have a good understanding of price action, reading chart patterns, support resistances, using the indicators for the appropriate market conditions, you should be a profitable trader. There are tons of indicators out there, but you only need to know the few key ones that can elevate your trading skills. The third most important tip, in my opinion, is to have reasonable income expectations from trading Forex. Now, trading is not a get rich scheme, and people who hype it disproportionately are only showing you the rosy picture, and they're not telling you the hard truth. Trading is like any other business where you put in money, time, effort, research. You go through ups and downs, such as any other business. There's always going to be wins and losses. You will feel lost and defeated at times, but if you look at the long term view and just the idea of being able to make money from anywhere in the world, using your laptop and internet, is incredible. And personally, this is what got me motivated to go the extra mile and learn trading the right way. Losses are part of the game, but it doesn't mean that your trading method is flawed. Just remember that there are bigger players out there called market makers with a lot of money, and they're hunting for stop losses. So don't worry if you're going through some losses in trading. It's part of the game, and just believe in your trading system, in your strategy, and keep persevering. I think that's very important. Um, Another thing which I need to mention also is risk management. It's a very, very important aspect of trading if you want to do consistently well in long term. My suggestion is that you invest only 2 to 3% of your total capital per trade and do not over leverage your account. Leverage is like a double edged sword because it gives you the potential to increase your account enormously. You can make lots of money, obviously, with if you know when you have high leverage, but the downside is, of course, you can also lose a lot of money. So use your leverage ratio carefully. Now, as far as the education is concerned, the purpose of creating this channel is to try and provide you high quality content that can help you grow and succeed in trading. I have lots of ideas for YouTube, and I want to make lots of videos for you guys that can help you improve as a trader. All I need is your support. So go ahead and give me a thumbs up, share this video, and subscribe to my channel. That's all from me, guys, in this video. Until next time, I'll see you guys later. Take care and safe trading.